Okay, quick Wednesday morning radar update for the second time because I forgot to have the screen live. So gap down this morning, we're just bouncing off the lows at the moment. Let's just jump through those big time frames because it's kind of epic scale micromanagement looking at these moves at the moment because they are micro moves. So we're just bumbling around on in that base area on the Dow, coming into mean trend probably. S&P, what's that? 3 days off highs, 2 days off all-time highs in the history of the world. Nasdaq traded highs in the history of the world yesterday. So obviously the two risk-on leading markets. Russell, right side of a base. DAX, just grinding sideways still after breaking out of that previous little base. Sat around mid-trend area. FTSE 100, yes, market what isn't any use to anyone who trades UK stocks, really, is it? If you're looking for growth, that one's basically just pulling into mean trend. 250, previous resistance becomes support and all that jazz. Mean trend area is a little bit lower, more meaningful to me, and you could say bull flag on small caps, but it's kind of just pulling into that previous minor high, I will add, very minor high. So that's what's happening in the markets. And if we just jump into commodities, middle of the road moves, I'm just going to, these deeper pullbacks, and you saw it here. I'll just go through the psychology of this. So you get the deeper pullback to the 200 area average. Sometimes they bounce and take the highs out and off they go on the journey again. But it's better to just get a bigger perspective on what's going on. So you can see we were drawing a few bear flags here, thinking it was coming in a bit deeper. The reality is on these things, the psychology is, I should say, is the people who pick it up off the 200-day area have to pass the baton to the momentum sort of players who are going to take it off to new highs. And that sort of happens around this area. Resistance is futile. That sort of happens when we say that boring middle of the road 50% retrace of the prior move. It's pulled in, it's bounced back up. That area, that's where it tends to sort of, that's where they have to pass the baton. The bounce traders pass it to the momentum traders who are looking to break the thing out. But also in the mix, you've got the people who bought it up here, and this is a scratch trade for them. They've sat through a deep pullback or minor pullback in their account, and they want out. So from that, I'll just move into Bitcoin, and we'll just talk the same because this was middle of the road, but this was an area of focus to get on board. This was a cheat. This was a get on board area for Bitcoin. Why was that? Well, simple. Breakout first retrace. To the range, build a case, mean trend, all the things we love. But what about this pullback here? Well, the first thing we acknowledge is this big wide range bar is not going to give anyone reward to risk, if it moves up above there. So a little probe below that is a good area to sort of see if the bottom holds for the swing entry and the people who want to pick it up and they think this is the pullbacks in. So this happens on this day here, and then it reverses on this day here. So anywhere in this area here is a good place to get on board with a low risk methodology. And you'll notice it comes down towards the low and doesn't even test. You could call that a test of lows, couldn't you? But the psychology of these people who are in the market from this band here, these guys are small loser scratch trade area where these get the chance. They've sat through this horrible pullback. They've lost half the money. They get the chance to get out. So what you've got is the people who bought here You know, they get itchy fingers. The people who bought here, they want to scratch trade, and that supply has to be soaked up by the people who want to break it out. So the momentum traders they're going to pass the baton, and you're going to see a lot of stock change hands in areas like this. You know, middle of the road, it might grind out. And the best thing you will see in an area like this is some nice basing action, some nice orderly action, because that will mean that the sell and buy pressure are equalising. And on a stock, you can look at the volume, can't you? But yeah, you know, that is the sort of reality. Now, it can go either way. This could be a lower high, or it could sort of take the highs out and you go, well, that was a whipsaw. You know, it's an outlier, whatever. So, you know, that's the psychology of what's happening in a lot of these markets. And, you know, we can go into, you know, cable, same thing here, this deep pullback to the 200. It got into this little zone where, you know, they're not so much supply levels, I would say, in these more sort of efficient markets. They're more memory as well, psychological levels. But in stocks, yeah, supply is, you know, a bigger part than the psychological levels, I would say, from what I sort of picked up over the years, what I believe in, I suppose, is the best way to put it. So yeah, you know, in reality, we've got a little wobble on, and it's, you know, it's absolutely minuscule. I don't know what it's doing today because this is yesterday's chart, so we'll move on. But it is just a little bit of volatility in the big picture is what I'm trying to say, and it's around that little area where you'd expect it to come in as well. So let's move into the volume screens today. Probably very slow. It feels like that, you know, this little bit of sun has brought your liquid markets back for a couple of days, and the market's just, you know, with the US holiday as well, the markets are really asleep. It's 10:45. We should have traded 32% to be on average volume. I'll tell you now, there's hardly anything running in the large caps, so that tells you that story. VLX, I have a position. Lion Trust's been running for some time now, hasn't it? Rear view for us as well. When I say rear view, it just means the low risk, high reward entry is playing out. We're in the story zone. Doesn't mean it's not gonna. It doesn't mean it's gonna run out of steam and retrace. Maybe 2/3 kind of do, but the strongest ones keep going. So that's the trade-off you have to live with. In the small caps, let's just go and have a look in those. I know SOM's popped today. That's a GTRS leader. Before we get there, I will just, you know, it's not a leader, but it's up there. It's trading towards earnings breakouts across the board, I think. So, you know, pretty good. Ticks all boxes, that. Everyone gets to play, I suppose, in that one. It didn't earlier, though. It was more of a... Oh, you'd have to have a look at the numbers. Let's just get through these. So, what did I say? 32% to be on average volume. Yeah, small caps are... We've got 43 in the small caps. They're doing okay. So, you know, go figure. ALU. Little bit of spider fell off its web, didn't it, here? But this one re-rated big time, and I just wish I was on board. But no, I'm not. I'll high five to those who are on board, because I know some of you are. But, you know, multiples of risk are fantastic on this. This must have felt horrible, but still, no breaking trend there, is there? For my time frames, rising on all time frames. A CTO, good energy there. That one's ticking back up as well. It's return to pre-tax profit. It'll be lower down on my list. 24, 30, decelerating on the turnover, but you know it's already rear view. We've seen it go through all the early entry areas. Science in sports, kind of sideways base in action, but not very defined, is it? Northbridge, return, that's a recovery as well. This is a higher high in the numbers on this, in some. So we've just looked at that. Obviously, you know, I'll just, you know, this is the decision day here for my style, and you know, I don't chase on days like this. If I had money to put in this at the time, I would have put it in where the reward to risk exists on this day here. On this open here, there was a big wide spread, and our open interest went through. Don't know where was the uncrossing trade. Go and have a look. I haven't got the level 2 up here, but I don't think it looks like about £5 would have been the yes, but it's still in the zone, wasn't it? If you wanted on board that, but I tend not to. I did post an audible on that one this morning, but only because it was high in the GTRS. I tend not to like to post audibles on news days. Let people make their own mind up, because news days are usually noise days. Moving on. Animal care. It's popped today. Yeah, coulda, woulda, shoulda. I wish I was riding that one. So many at the same time. You know, was fully invested all the way through this phase in the market. So it's only recently I've got a little bit of cash. You can't be in everything. No forward on that one. WINK, obviously bit of a messy base, this one. It's a REIT. It's probably the highest REIT on the GTRS, or one of. I'll just show you that one again. It's top 100, and it was trading towards good numbers, and it's just come out and said, you know, we're still trading towards good numbers. So, you know, that's how the these are yesterday's numbers in the GTRS, and you know, it's not that the GTRS is high in the GTRS because it's had a good news report today. No, far from it. It was high in the GTRS back here. SOS, this one is a lose less scenario. It's accelerating on its turnover. So if you reading the results, it should say something in there about it. 9 to 12 to 24. So recovery, but loss making. Obviously, you can see the earlier entries we've already noted. Moving on, ASCS. This is a lose less as well. It's a tick back up in the turn. Moving on. BKS, I have a position. This one's, you know, BKS. So, though everyone talks about their stocks when they're doing well, me included, try and take it as, you know, more methodology, where to, you know, how this trade was loaded and the journey of this position, rather than, you know, it's up 40% plus whatever for us. With I've added twice, so it's more about the methodology when I post these things. Always remember that. It's not important what one trade in the portfolio does. It really isn't. It's all, just important what the methodology as a whole does, and that is gained by, you know, having a methodology in the first place, and trading. I trade signals, I do not chase. Now, as I always say, gap risk ahead. You know, try and build a case, obviously, but gap risk ahead. Got a big cushion. You know, I just fly through these, whatever. But what I'm trying to get across here is I've got a position. Nobody should buy this on the back of me having a position in a place where the reward to risk does not exist. You know, the last reward to risk area was probably around the breakout area. So, you know, the pullback here hit our screens, the breakout area hit our screens again. And I added to the position on the breakout. So that's what you've got to remember, you know. Always about reward to risk. Where am I long, where am I wrong, without chasing. Moving on. That's for all non-members of Trading Basis, because the last thing I want people to do is just follow stocks I'm in from, you know, not buying them in the area where I only buy. You know, when you see a trend, that's where we're getting paid. It's not where we're executing, is what I'm trying to get across there. Cyan, good update on that. It's a POS as well. It's a lose less again. It's a 2 to 6 to 9. It's probably decelerating on the turnover. Pretty big tick ups in percent terms, though, I would say. Probably 50%. And yeah, it's a lose less. It's kind of a slim lose less on that as well. But it's in motion, stage 1, stage 2, stage 3. If you're not on board that, I would probably just step aside and wait for the next one. A dark trace, obviously, I kind of covered this in yesterday's about finding low risk entries in retraces or IPOs. IPO retraces. And this one broke out a few weeks ago, didn't it? And I have got something on it, actually. I just can't remember what it was. DNM. So, positive decelerating. It will be okay. The quarter on quarter looks fantastic. The year on year looks okay. Good on the turnover. So, it does tick one of the thresholds we follow. But it's a low float and it's a mid cap. You know, say it again. This is the getting paid end, and with the percent cushion before it goes through results, not the execution end. So if you're holding that, high five to you. So that's quite an in-depth one today. It's a very slow day. I hope people are enjoying, you know, what I'm doing here. I'm getting a little bit more done this morning because it's going to be a warm day in the office today, and I'm going to walk away from the screens. So, you know, if you do like these videos, just hit the like and subscribe. I only realised yesterday that I don't have comments on my videos, and I must go into the settings so people can comment on them as well. So, always from my point of view, it is what it is. Hope you enjoy it.